Hey everyone, it's Scott Kuru here, and I've got a warning for every single Australian, because what we've been saying now for the past 12 months about the property market is literally at our doorstep. And one of the biggest financial institutions that are responsible for predicting the property market has come out with a huge prediction for what's going to happen to the property market in the next 12 and 24 months. Now, depending on what side of the fence that you do sit, you're either going to love this or you're gonna hate this. Now, in this video, I'm gonna give you 5 really important pieces of data. I'm gonna share a number of charts with you, so stick with me to the end here, because this literally could change your thinking and your thought process and your strategy for your property investment over the next 12 to 24 months. So guys, just in the last 30 days, it's actually been a very interesting time in the property market and also in the finance sector. There's a lot happening around the world, a lot happening in global markets, and there's actually a lot of talk internationally about what's going on here in Australia. Now, because of that, a lot of the big research companies, a lot of the big financial institutions here in Australia are starting to revise their forecasts for our property market. And what is actually occurring is they are lifting these forecasts and they are putting down some very substantial numbers on paper. They're putting their names and their reputation down to say that the property market will go through a mini boom in the next 24 months, 2, 3, 4 years, and actually moving ahead, they do forecast that we are on track to see another doubling of property prices here in Australia over the next 7 to 12 years. Now, there's a number of reasons why that will happen. I'll unpack that whole thing, but I want to share with you, this latest prediction comes from AMP. So AMP came out with a new prediction. They've updated their forecast. Now, they are saying that the median national house price in Australia this year, 2025, will grow about 7%. That's huge. A year ago, people were saying 1, 2, 3% growth. Now they're saying 7% growth. Remember, the market only needs to grow 7% every year for 10 years for the market to double. Now, what they are saying for 2026 is 10% for the national number. That is a huge number, and it correlates and it aligns with a recent Westpac prediction as well. I'll link to a video I did about Westpac below so you can check that out. Westpac also came out with a 10% growth prediction for 2026. So I want to put this into perspective in terms of what this means for your financial freedom and your financial future, because ultimately, why are we investing into property? We're doing it for a financial return. We're doing it because most of us are going to need $2, $3, $4, $5 million to be able to have financial freedom. For me, the number is 5 million. That should be a target that we all have, that we all go for. If we only get 2 or 3, that's also okay. But if you've got a $1 million investment property and that property grows by 7%, that takes the property from $1 million to $1,070,000. Now, that's just in 1 year. That's just in 2025. But then in 2026, if that property grows by another 10%, that will take the property from $1,070,000 to $1.177 million, okay? That is actually $177,000 of growth in just a 24-month period. And remember, you've only had to put into the deal $100,000, $120,000 cash to actually get in that deal. Maybe you're using money from your super, maybe you've refinanced your main home, so maybe it's a 100% debt deal. Now, in that case, guys, you've actually created almost $200,000 of wealth in just 2 years. So this is the times that we live in, guys. We are living in a time of huge asset inflation. And I'm going to get onto those 5 reasons as to why this is happening and the 5 reasons that Westpac, AMP, and other financial institutions are pointing towards and are saying are the drivers and the key factors for this growth. So guys, the first point is interest rates are falling. We are in a cutting cycle. So just in the last 6 months, we've had 3 rate cuts already. And the next 6 months, we are expecting 1 to 3 more cuts. This is giving people increased borrowing capacity, somewhere between $50,000 and up to $150,000 of more borrowing capacity, which they're going to put straight into the market. The reason why they're going to put that straight into the market is, and this comes to reason number 2, we are actually living in an environment where it is structurally impossible to create enough housing to keep up with our population growth. And because of that, and because of the lack of housing, this increased borrowing capacity literally is funds, a war chest of funds that buyers have to battle other buyers. So you've got more buyers, limited supply. They are going to soak up all that additional borrowing capacity in trying to get into the market. Now, this actually brings me to point number 3, which is driving the market. And this is the first-time buyer incentives. Now, I'll also link to a video below that will tell you all about this scheme, how it works, how the government set it up, the problems with it, and there are quite a number of problems with it. But essentially what it does is it drags more first home buyers into the market because it gives first home buyers the ability to get into the market with just a 5% deposit. Okay, so this is substantial. And if you add on top of that the existing incentives, such as the fact that first home buyers don't have to pay stamp duty, then this means that we could see a doubling or a tripling of first home buyer demand in the next 12 to 24 months. That additional demand, plus the demand from investors and the already existing demand from a growing population, is what is going to drive these new forecasts. This is what AMP, Westpac, and all the major banks are saying. So guys, point number 4 is we are seeing in the data just in the last 30 to 60 days, pre-approvals for loans from first home buyers and investors and owner occupiers increasing and hitting record levels. For example, check out this data from Commonwealth Bank. Now remember, almost half of all home loans do come from the Commonwealth Bank. So tracking their numbers tells us a lot about what's actually happening in the market. And they have seen their pre-approval rate jump by 12% just in the last 30 days. That is substantial, and that is telling you what is happening on the ground right now. Now, that 12% jump in pre-approvals hasn't translated into property purchases yet. Let's be clear, that's just people going out and getting the finance approved to buy, but those pre-approvals mean that there are more people gearing up and getting ready to get into the market. And guys, you have to realize we're coming into the spring selling season, which traditionally is the strongest the market is at this end of the year moving into Christmas. So point number 5, guys, in addition to tax cuts, in addition to interest rate cuts, we are also seeing wages increase, and we're seeing the rate of wages increase to be above that of inflation. In fact, in the last 12 months, wages have grown on average about 3.4%, but there are certain industries and certain jobs in the market which are growing 10, 15, even 20% year on year. So a lot of these people that are in certain jobs where there's a limit on the amount of people that can fulfill those jobs, they are able to go out and negotiate 5, 10, 15% pay increases. This portion of the market also will become property investors. So we will see more property investors. In fact, check out this chart. This shows you that we are now looking at record numbers of Australians every single month going out to buy an investment property. And predominantly, this is people that already own a property, have a lot of equity. This is people that are getting those 5, 10, 15% pay increases, and they love the market right now because there have been 3 rate cuts, more rate cuts to come. This means that the cost of holding the property will be lower and the cash flow on the property will actually be a lot better. This is encouraging a lot more investors into the market. So guys, remember what's going on in the market. We are actually seeing the beginning of this mini boom, the last boom for this decade. I have linked below to some other videos where we have predicted this. 12 months ago, we sent out this warning to everyone. I want to let you know, if you're a first home buyer and you're trying to get into the market, I want to let you know that those areas that are affordable for you right now, depending on your capital city, $600,000 to $1 million, you're going to see these prices outpace you potentially. So get in as soon as you can. Secure something right away. So guys, really appreciate you. Hope you enjoyed this video and this information. Make sure to hit the like button and subscribe so that you can get videos like this every single day. This is your daily property update, your 3 to 5 minute update on the property market every single day so that you can be a property insider. Take care, everyone.